Hey traders, welcome back to this week's weekly Forex forecast. Last week was a pretty slow week. Had President's Day on the Monday and it truncated the week. It was a 4-day traded week and opportunities were kind of few and far between. There were opportunities and it was another winning week in the GMT members area with the real-time setups. In fact, last week was 20 weeks now in a row where I haven't had a losing week. My last losing week was back first week of October, so nearly 5 months now. And in today's video, I'm going to show you the exact setups that I'm taking in real time with GMT members. And I'll also show you the setup which got away from me last week. Crude oil was a fantastic short from the upper bound last week. Really nice move up and then a really solid reversal right from the upper bound. I just left my entry a little bit too late and unfortunately I left that one on the table. But we'll look at that setup in today's video, as well as the Japanese yen pairs which are setting up as the best opportunities for profiting from Forex, in my opinion, next week. Okay, so moving on to the portfolio selection, and you can see straight away the Japanese yen is the strongest currency going into next week quantitatively. And I do think Japanese yen long as a theme is the best theme for next week. It's the best opportunity to make money. So we are going to be looking at the yen pairs. We're also going to be looking at the pound pairs. Now the pound is not as strong as the yen. And in fact, a number of these markets are kind of choppy and neutral. But we are still seeing inflationary pressures in the UK, which is supportive of the pound. It's keeping the pound kind of afloat. So, you know, we're seeing on the one hand, the pound being supported by those inflationary pressures. And at the same time, we're starting to see the Japanese yen responding to those higher bond yields in Japan. So 1 and 2, I think, are pretty clear. The third theme to the long side, you know, usually I like to look at 3 themes to the upside, 3 to the downside, and then we cross-reference them. But the third theme this week is not as clear. Yes, the Canadian dollar is sitting right there, but as I referenced that sell-off in crude oil, that is going to have a negative effect on the Canadian dollar. And I'm not sure that's going to be one of the best longs going into next week. So we'll skip that for the moment and look to the short side. The Swiss franc is the #1 short and the euro is the #2 short. And notice you've got the kind of EU majors there of euro and the franc to the downside or weak. You tend to see that in inflation regimes, but then you see the dollar kind of picking up as well. So when we look at the third theme to the downside next week, this also is not necessarily as obvious as in many weeks. So we are going to look at the US dollar to the short side because quantitatively it is still weak. But if we're starting to get an inflation regime, as we're seeing the EU majors suffering, and we're seeing the commodity currencies picking up, even though crude oil is coming down, is negative for the CAD, it does tell me that we could start to see an uptick in the US dollar. So I do just for next week like the US dollar to the short side, but we're going to be looking at it only primarily against the yen and the pound. So aside from that, I also want to look at Aussie CAD. So Aussie CAD is a third kind of, not really a theme, but it's a pair that I want to look at because I do think Aussie CAD to the upside or buying opportunities in Aussie CAD if we get weakness is going to be something we can look at as well. So we're going to be primarily kind of maxing out the yen pairs and the pound pairs next week. We're going to look at US dollar yen to the downside, euro yen to the downside, franc yen to the downside, pound dollar to the upside, euro pound to the downside, pound franc to the upside. And the third theme that I like actually going into next week is Canadian dollar weakness, because we are getting, again, these currencies are weak, but they're getting stronger. And the Canadian dollar is actually going in the opposite direction. Now, that sell-off in crude oil at the end of the week, we saw from the upper bound in last week's video, that is going to put downward pressure on the Canadian dollar. So we're also going to look at CAD yen to the downside. I will also be looking at pound CAD to the upside in today's video. Now, alongside that, we'll of course be looking at euro dollar like we do every single week, and we're going to be wrapping up the video as always with gold and silver. Okay, so kicking off the watch list as we always do with crude oil. Now, crude oil was an opportunity to the downside last week. I was looking at it, and you can see this reversal came right from the upper bound in last week's video. So if I pull up crude oil from last week, you can see in replay mode here that we start to make our way up towards the upper bound, and we're looking on the 1 hour chart here. Each candle is a 1 hour candle. But we start to make our way up towards the upper bound from last week's video at the 73.00. So you can see we start to trade into it, because when I'm talking about in today's video how I'm looking for reversals from upper and lower bounds in stronger or weaker markets, this is exactly the setup that I'm talking about, and it's exactly what I'm doing in real time with GMT members throughout the week. And you can see here we come up, we take out the upper bound 7,300, and we start to see a lack of momentum. Now, if you look to the left-hand side, you can see a couple of things. We've got a prior high over here. okay? So we trade into this high, and already we're starting to lack momentum. Look at this wick on this 1 hour candle. We then attempt a second rally, and it's an indecision candle. It's an inside candle. So now we've had 2 attempts above this prior high, and also we've just wicked and entered the sell zone where the odds, regardless of technical analysis, the odds start to turn for a reversal. In other words, the odds of continuing start to diminish and the odds of reversing start to pick up. But the first thing I'm looking for is this lack of momentum. I'm looking for it to come into the sell zone and start to fade, start to see the ball struggling. I'm not just immediately jumping into this because it could just wick the sell zone or it could push quite deep into it. You know, you have to kind of look and then overlay your technical analysis for timing. So we start to test it and we start to fade. And this is where I'm looking at this for a short and it starts to do this. Now, at this point last week, I'm looking for one final test of the inside candle, potentially a test of the prior high, and then I'm looking for this kind of double top formation on the lower time frame because this is a momentum, this is a consolidation, and what I wanted to see is on lower time frames one more attempt at this high, and that was where I was going to pull the trigger on a short. Instead, we get this 1 hour candle down, and now I'm looking at this and I'm thinking, should have just pulled the trigger on that, right? We can see the momentum, we can see the previous Kiev resistance we traded into, and we've entered the sell zone, immediately rejected from it. So if this comes back up and we can kind of get a retest, maybe even just at the prior high over here for kind of right shoulder, or we take out the upper bound, then I'm interested in shorting it. And what happens? We're starting to pull back. I'm looking at it. I want to see this pull back a little bit more, and we just continue to sell off. We start to break the prior low here. Now you've got a third wave because there's your second wave. There's your failure to make a new high and your third wave kicking in. And we start to just fall out of bed. But when we're going through the videos, these are the setups that I'm looking at in real time with GMT members. And at the same time, these are the setups that I'm talking about. So unfortunately, even though it was another winning week in the books last week, this one did get away from me. This was one that I left on the table. It was a bit of a missed opportunity for me last week. So coming into this week then, I do favor shorts once again in crude oil. And if we can come back and retest the upper bound, and again, to the left here, if we could retest this high, you know, we're kind of in this range between this low, kind of bouncing at it, but shorting every rally as opposed to buying the dip because overall, you know, we're looking at a weaker market. So above the 72.59, I would be interested in shorts in crude oil once again. If it comes back up here, we did have a strong sell-off last week. When that happens, very often you get a consolidation and then you get the kind of intra-week breakdown. So intra-week breakdown, bear flag next week is probably more likely because we had the sell-off last week. But if we do reactively come up and take out the 72.59 again, I'm going to be looking for momentum to start to fade, just like last week. And if we can take out this high, you know, this is going to be a great place once again to look for a reversal to the downside. If we blast through here, it's not expected or anticipated for this market to take out the 74.93. It's kind of not an emergency situation, but it's, you know, it's abnormal volatility. So it's a place where the odds actually go up from about 7 out of 10 from the blue levels to about 9 out of 10 for a reversal. If you've got a strong catalyst, very often that can push markets to their upper and lower bounds in the gold. So the gold upper and lower bounds. So if for whatever reason, unexpected catalyst takes place or whatever, we trade above the 74.93, this would be the second place. Whether I'm already short from over here and risk managing this, or whether this is an initial position, this would be the second place I'd be looking for a short. And the third and final thing, and again, crude oil is, you know, a commodity, so it's more volatile. Breakout trading does tend to work best on commodities. And because we had that sell-off last week, I would not be surprised to see crude oil pulling back, testing the moving average, even breaking above it, and then you get the break back down below. The moving average follows, you get the pullback into it, and that move away sets up a nice bear flag opportunity down to the 67.90. This is the buy zone, this is the sell zone, so I'm only looking to be a seller if it enters the sell zone. But if you're involved intra-week and it moves down below the 67.90, great profit taking opportunity once you start to trade below that level next week in crude oil. Okay, so kicking off the Forex markets then with the yen long theme, starting with franc yen. I would like to see franc yen pulling back. I can either be a seller or do nothing. I cannot buy this market next week. The upper bound is at the 168.64, and we do have a nice high here. So again, think back to that crude oil opportunity from last week. In that situation, we tested a prior high first, and then we hit the sell zone. If you hit a key area of resistance and then the sell zone, you tend to see markets reversing fairly quickly from the sell zone, like in crude oil, it wicked it and then reversed. If there's no resistance before the sell zone, in this case, and there's one just after, you can see it push through fairly deep, test that resistance, and then you get the bigger reversal. So I am going to be looking for that next week to the downside. It is top of my watch list along with the other yen pairs. If we end up coming all the way through, because, you know, what if I get short here and something unexpected happens? Doesn't happen very often, but it does happen occasionally. Well, if the market starts to blast all the way through and takes out the 170.99, especially as we have a nice key area of resistance here, nice support level here, sets up this kind of area. This is going to be a place where I'm going to pull the trigger either for a second time on a short and cost average that first one, or if I'm not already involved, that's a great initial short. So the primary setup I'm looking at next week is a short from above the 168.64. The third and final thing is, as always, every single week, if you start to see the market pulling back towards the upper bound, so being reactive, just watching, the market's pulling back, I'm waiting for it to short above the 168.64. I'm waiting for it to push above the 168.64. It gets close, and instead of testing it, you get momentum in the other direction. Okay, that's when the moving average follows, and that's where you get your bear flag set up if you're looking for that intra-week, down to, in this case, the buy zone, which is the profit-taking zone for shorts at the 163.93. Next is Euro Yen. I can either be short or do nothing. I cannot buy this market next week. The sell zone next week starts right at the 158.58, and what I like about this is not only do we trade right into a price support area, you can see this is a consolidation. It's a little bit of a kind of descending triangle. But if we start to push into this, we're going to be right at support. If we manage to break through, we're going to hit straight into resistance from this prior consolidation. So this sets up a really nice area to start to look for momentum to fade, like we were looking at in crude oil, and look for the buyers to liquidate their positions, because that's what happened. They're trying to break out trade to the upside at a point where this market is likely to pause or reverse. It's run out of steam for the week. There's no more runway, and people are still trying to push it further. Then once it slows down, they pull their positions, and that liquidation is where you can get paid for 1 or 2 days out of 5. So the second thing I'll look for is, and usually I don't want this to happen, but if it does end up at the 160.99, this is where we become extremely overbought during the week. So above here, we're overbought, and above here, we're extremely overbought. In a market, we're looking for shorts. If that happens, that's the second place I'll be looking for a 1 or 2 day reversal to the downside. And the third and final thing is, if we start to make our way back towards the upper bound, but we fail to get there, and instead you get what's known as a fast market, you get momentum back to the downside, you can look for the pullback, that first pullback into the moving average, the move away for that bear flag opportunity down to the 153.77. Next is CAD yen. Big sell-off in crude oil last week. It's going to continue to put downward pressure on the Canadian dollar. Pairing that with the Japanese yen, I think, is one of the best ideas for next week. So what I'd like to see, as always, I want to see strength in CAD yen. If I have a short bias, that means I'm looking for short opportunities. It does not mean that I'm predicting CAD yen to fall out of bed from Monday and go all the way down to its second lower bound. What it means is I want to see momentum to the upside. I actually want to see strength coming into CAD yen, because then I can look at this and say, this is a mispricing. You know, this market is weak, it should be heading down, and now it's overbought during the week. This sets up an opportunity where the odds are in our favor to pull the trigger on a short. So I'd like to see some strength in CAD yen, even though I have a weak bias or a short bias. And I'd like to see CAD yen take out the 106.60. We become overbought during the week, and we trade, we stair step right into a prior support level. So we break this with momentum, pull back and a retest. That is going to be a great place to start to look for momentum to fade for a 1 or 2 day reversal to the downside. If we blast through this, again, not expected, you know, we're not seeing tests of upper and lower bounds with the gold levels at all. Really, this only happened with the yen pairs to the downside, but we're looking at yen long, and so it's not surprising that, you know, it makes its way down. You've got abnormal momentum to the downside in a strong market, right? In other words, the yen is strong, but it's paired always, you know, as the quote currency. So you're going to see it. If it's strengthening, markets are going to sell off, right? CAD yen to the downside, Euro yen to the downside, etc. So if we do blast through and we take out the 108.26, this is the second place, really nice resistance area here as well. They'll be looking for a 1 or 2 day reversal. And the third and final thing is, if we start to make our way back towards the upper bound, we cross the moving average, but instead of testing it, you start to see a continuation of the trend. And that should be obvious. You know, you should see the market kind of chopping around, but then you should see momentum clearly. You shouldn't have to squint at it. And then that pullback, first pullback into the moving average, sets up that bear flag setup. Usually you only get one of those in the 4-hour time frame each week into the 103.27. And last but not least, we have US dollar yen. As we're starting to see bond yields going up, Japanese yen strengthening, money is coming out of the US dollar into that. So I am going to be looking at shorts potentially in US dollar yen next week. I want to see US dollar yen pulling back. So even though I have a short bias, I want to see strength in the market so we can take out the 150, 151. And this is where I'm going to be looking. Now to the left-hand side, this high is quite deep. So, usually I'm looking kind of in the lower half here. So we are still in there. It's not deep enough that, it can't be tested. So ideally we can pull back, take out, we enter the sell zone. So we become overbought during the week. We take out our prior resistance, and that's where I'm going to be looking. What are buyers doing? Are they struggling? Are we seeing momentum fading? Because if they're starting to get fatigued in their long positions, just like last week in crude oil, they pull their positions, and that's why you see that strong liquidation to the downside. There's nothing magic about it. It's trader psychology, and we're always looking at where other traders are making mistakes. It's a zero-sum game, where somebody else is making a mistake in Forex, that is where you can capitalize on that. So, if you're entering into an area where this market is overbought during the week and you're trying to buy it, that's a mistake, right? So we can be there to take the other side of that position. If we end up above the 153.73, it's not expected, but if I am involved already in a short, or whether it's an initial position, that would be the second place. This is only going to happen roughly 5% of the time, if not less. And the third and final thing is if we start to make our way back towards the upper bound, but instead the market is so weak that it can't get there and it just starts to resume the trend to the downside, that's what sets up that potential bear flag into the lower bound next week at the 147.08. So you've got a few things you can look for in terms of setups next week, and each pair is going to provide a different result. You're not going to get a bear flag in every market. You're not going to get a first upper bound test in every market, but you're going in with a plan, and then you're seeing reactively what sets up so you can take it in real time. Moving on to the pound pairs, starting with pound franc. I can either be a buyer or do nothing. I cannot sell this market next week. The buy zone sits at the 1.1242. So if we come down and take this out, I'm going to be looking again for momentum to fade. Where are the sellers getting fatigued? We're quite deep down here. There is a key area of support. So very much like there was a resistance area and then the upper bound in crude oil, we've got a support area and then the lower bound. So if we test this, I would not be surprised even next week to see this, testing a shallow test and then starting to bounce. So I'm going to be looking for that next week. If we end up down below the 1.1144, as unexpected as it is, this would be the second place. I'll be looking for 1 or 2 day reversal. And the third and final thing is we're already below the moving average, so you can look for that intra-week bull flag breakout with momentum. The moving average follows it. You get the pullback, test, and that push away. It doesn't always test. Sometimes it just hugs it, and you get that move away into the sell zone, the profit-taking zone next week above the 1.14395. Next is Euro Pound. I can either be a seller or do nothing. Cannot buy this market next week. We've broken out of this consolidation, so I'd like to see this, of course, pushing higher. We start to breach the 0.83313. We become overbought during the week in a market that we're only looking to be short. And here's a really nice key area of resistance. So this is the high in the 4 hours I'm going to be looking at. If we test this, we breach this, we test this. It's the first place I'm going to be looking. Do we start to see buyers attempting the breakout and struggling? If so, that's going to be the opportunity for a liquidation to the downside for 1 or 2 days. If we blast through as a plan B, above the 0.83806 is the second place. I'll be looking for a 1 or 2 day reversal, even though I don't expect it to get there next week. And the third and final thing is, if we start to break above, make our way back to the upper bound, which is the primary setup that I'm looking at. But then you get a strong market, so it just sells off. You get momentum to the downside. It breaks above it, and then it sells off, pulls back into the moving average, and that sets up the opportunity for a potential bear flag setup. Those traders who trade Fibonacci, this kind of thing, that's the kind of setup that they can look for down to the profit-taking zone next week at 0.82327. Next is pound CAD. I can either be a buyer or do nothing. With crude oil selling off, this should be negative for the Canadian dollar, at least putting downward pressure on it. So if we start the week and we start to see some Canadian dollar strength, and that pushes pound CAD down into the buy zone below the 1.7832, that's where I'm going to be looking for the sellers to start to run out of steam. There's a nice low. There's another low right next to it. So that would be the primary area in the sell zone next week, in the buy zone next week, I'd be looking for a potential long opportunity. Looking for sellers to start to fatigue, to pull their positions for that 1 or 2 day reversal back inside the range. If we end up down below the second lower bound next week, there's a low right here. Again, don't expect it to happen, but if it does, as a backup plan, that would be the second place I'd be looking for 1 or 2 day reversal. And as always, if we start to make our way down to the lower bound, cross the moving average intra-week, and then we break back above it with momentum, looking for the pullback into the moving average and the move away for potential bull flag setup into the upper bound at the 1.8118. I don't really trade bull flag setups. They are there. I like to use the setups so that if you are trading Fibonacci's, you can augment, your strategy with the weekly Forex forecast. I primarily like to trade from above and below the upper and lower bounds. Next is pound dollar. Again, I can only be a buyer of this market. I cannot short this market next week. So I want to see pound dollar coming down. I want to see pound dollar taking out the 1.2510, and that's where I'm going to start to look. Once we enter that sell zone, where I know the odds are now shifting for a reversal, where could the reversal take place? There's a low down here. It's quite deep. So one of two things, either we test this deeply and take this out, and that's going to be a great place to start to look for the sellers to pull their positions, or we might enter this, and because it's quite deep, you might find, similar to crude oil, it creates its own support. So it kind of comes down, tests the low, then it tests the low again, and then it tests the low, and you see it fading. And that's where I'm going to be looking for 1 or 2 day reversal. If we end up below the 1.2386, we become extremely oversold during the week. So this would be the second place below here. I'd be looking for 1 or 2 day reversal, although I don't expect that to happen. And as always, the third and final thing, we break down towards the lower bound, and instead of testing it, you get the re-break and the trend continuation during the week, the hug, the move away into the profit taking zone next week, which is above the 1.27579. Okay, so wrapping up the Forex universe with Aussie CAD, Euro dollar, then we're going to look at gold and silver. Starting with Aussie CAD, I can only be a buyer of this, cannot sell this next week. The buy zone starts at 0.89629. This is the point at which next week we start to turn oversold in a market that I'm only looking to be a buyer of, that should, on balance over time, either go up or at least hold its range. So I do want to see the 0.89629 tested, and we do have a prior low down here. So especially if we can breach this and we come all the way down to the prior low and test this, this is going to be a great place, because now you're attempting, or you're looking at sellers attempting a breakout deep in the buy zone. So it's oversold and they're trying to break out. This is where you get reversals. This is where you get reversals and liquidations. So I'd like to see this take place. 1 or 2 day reversal to the upside is what I'll be looking for next week. 1 or 2 day reversal to the upside is what I'll be looking for next week. If we come all the way down and we end up taking out the 0.88828, although this is unexpected, if that happens reactively, that is the second place I'd be looking for 1 or 2 day reversal to the upside. And the third and final thing is we start to make our way down towards the lower bound. So I'm looking, this is starting to sell off. And then you get that intra-week reversal back inside the moving average. So if it's coming down, you're back above the moving average, it pulls back, and then you can look for that bull flag setup into the upper bound, the 0.9123. This is where we start to become overbought during the week. So if you're long, it's a great profit taking target for Aussie CAD next week. And finally, we have euro dollar. Now, the euro and the dollar are both weak. On balance, the euro is weaker in the quantitative data. And so I do favor short positions in euro dollar next week. We also have, not next week, but the week after, an interest rate decision out of Europe. That means the euro pairs are more likely going to hold their ranges over the next week or so. So euro shorts are actually going to be something I'm really interested in next week, because if we trade above and below upper bounds, those euro pairs should lack direction. They should really hold their range as well, leading into the interest rate decision, not next week, but the week after. So if we start to see strength in euro dollar, we get some dollar weakness and we see euro dollar pushing higher. The sell zone starts at 1.05692, and we have a major prior key area of support broken, potentially turning resistance to the 1.0604. So this is going to be a great place to start to look for buyers fatigue starting to break out. Maybe we even attempt it, we kind of pull back, that's a good setup, and then we get the failure for 1 or 2 days down. If we blast all the way through and we end up at the 1.0677, this is, in my opinion, very, very unlikely, not just because it's abnormal momentum, but it's abnormal momentum before an interest rate decision, not next week, but the week after. These markets tend to do nothing, or they just kind of hold their ranges, into these. It actually helps when you're looking for reversals. Bad if you're breakout trading. So if we do blast through and we take out the 1.0677, this is going to be the second place. We're looking for a 1 or 2 day reversal, probably for a retest. You break out, test this, you're probably coming back to retest this. And the third and final thing is we start to make our way up towards the upper bound, but before we get there, we break back down below the moving average. The moving average follows it, and you get that kind of hugging of the moving average. And the first pullback and move away into the lower bound at the 1.03526. So I can only sell this market next week. I cannot be a buyer of this market next week. Okay, so wrapping up the video with gold and silver. Gold continues its relentless march higher, and I still have, on balance, a bearish bias on the dollar. So this is removing a headwind for gold, and it means that any kind of dip, I am interested still in buying. What I'd like to see is I'd like to see gold come down, take out the first lower bound at the 2870.32. Really nice low over here. If we get this sell-off next week, this is where I'm going to start to look. Start to look to the left. Identify key area of support that sellers are attempting to break through. Look to see if momentum starts to fade, and then look for those sellers to pull their positions and get that bullish liquidation for 1 or 2 days. That's what I'm going to be looking to capture. If we end up coming all the way down to the 2804.56, and I've said this every week with gold, that we've got this lower bound at the 2804.56 in this case, second lower bound, abnormal momentum would take it there. I've put it in every single week as a backup. Have we hit it? No, we haven't hit it. So it is just a backup, but if we do end up coming down here, although I don't expect it, this would be the second place I'd be looking for a 1 or 2 day reversal. And the third and final thing is start to look for the pullback towards the lower bound. And then during the week, instead of getting there, you get the reversal, the trend continuation, the moving average follows it, and you get that bull flag set up into the upper bound and the sell zone for profit taking next week at the 3001.83. I continue to favor gold longs over silver longs. However, if we do take out the lower bound, I may be tempted to look for silver long opportunities next week. I can only be a buyer or do nothing, cannot short silver. What I want to see is if we get silver coming all the way down, taking out 31.15, this is a really nice low. This is a place where the sellers drove it down to this level and then they capitulated and we got the reversal. So if we do break through here, enter the buy zone and we take out this low, this is where I'm going to be looking for the sellers to fatigue for a 1 or 2 day liquidation back inside the range. If we end up at the 29.82, again, haven't done it, in a long time in gold and silver. But if we do take out the lower bound, there's a nice area of support down here. This would be the second place as a backup. Whether I'm long already or not, I'd be looking for a potential 1 or 2 day reversal. And the third and final thing, and especially with commodities, breakout trading tends to work best with commodities and yen pairs. If you start to get down towards the lower bound and you get the intra-week reversal, and it should be obvious, you should see strong momentum. You should almost feel like you've missed it, right? The momentum has happened, you kind of missed it, but then you get the pullback into the moving average, the move away, and that sets up the bull flag setup in this case into the sell zone, the profit taking zone next week above the 33.82. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.